Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. In the green, tech stocks lead gains in Asia after soft US inflation sees the benchmark S&P storm into positive territory for the year. Trump's tech deals, the US president touts a flood of investment agreements in the Middle East. Bloomberg learns the UAE could gain access to 1 million advanced chips from Nvidia. Plus, China's most valuable company reports. We're going to bring you the numbers from Tencent with the focus on advertising and cloud revenue growth. Good morning, happy Wednesday. So European futures are pointing lower after 4 straight days of gains, but the optimism is still there when it comes to the US tech story. Mag 7 gaining 2.2% by the end of the close yesterday. A flurry of deals in the Middle East. We'll unpack those in terms of semiconductors, and then the more benign picture on the inflation story of the US as well. Punching through gains now in terms of the S&P 500 for the year, offsetting the downside we'd seen on the back of quote-unquote Liberation Day. FTSE 100 futures pointing lower as well by 0.3%, but I've talked about the optimism in the US story. That continues today with US futures on the S&P pointing to modest gains of 0.1%, looking to build on the upside. 0.7% added yesterday, more than 1% added on the Nasdaq 100. Those futures pointing to gains of 0.1%. Let's split the board then and have a look across asset treasuries. Relatively stable, the 10-year at 4.46 right now. The euro at 1.11. The ECB's Villeroy has suggested another cut for the ECB could come through this summer. Brent trading at $66 a barrel, down 0.7% on oil after the gains that came through yesterday on the easing of trade tensions between Beijing and Washington. Gold at $3,224 right now, down 0.8% on the yellow metal. So $1 trillion of deals. That is what Donald Trump and Saudi Arabia's Crown Prince are touting after the first day of the US president's Middle East tour. But the total amount is unclear, with the White House later saying investments are worth $600 billion. $1 trillion, $600 billion. There's a gap, obviously. Trump also touched on the region's geopolitics, urging Iran to make a nuclear deal and vowing to lift sanctions on Syria.
Apple is investing $500 billion. Nvidia is investing. TSMC is investing $200 billion. And with this trip, we're adding over $1 trillion more in terms of investment. I have never believed in having permanent enemies. I am different than a lot of people think. I don't like permanent enemies. If I can make a deal with Iran, I'll be very happy. If we're going to make your region and the world a safer place. But if Iran's leadership rejects this olive branch and continues to attack their neighbors, then we will have no choice but to inflict massive maximum pressure. I will be ordering the cessation of sanctions against Syria in order to give them a chance at greatness.
OK, Horizons Middle East and Africa anchor Jemana Pasetchi has been following all of this for us on the ground in the Saudi capital, of course, Riyadh. Jemana, wow, what a headline, a set of headlines coming through from the region, from Saudi Arabia, just in the last 24 hours. And we're all only kind of day 1, day 2 into this visit. Talk us through the deals that have been announced so far.
Yeah, I've got to say, I was in the room yesterday when the Crown Prince and President Trump were delivering those remarks, and the feeling was electric. Both of them certainly know how to play to the crowd. And there was this sentiment that is very widespread over here, and that this trip has done a lot to elevate not just Saudi Arabia, but the GCC's role, not just geopolitically, but also as growing financial hubs. And even President Trump referred to that in his speech. He talked about Saudi Arabia becoming a financial capital of the world. And that is exactly the type of statements that the Crown Prince wanted to achieve out of this trip. Now, in terms of agreements, we always knew it was going to be about deal making. That headline came through. There's some confusion as to what exactly was agreed in terms of that headline figure, but the White House has stated that they have come to a $600 billion investment pledge from the Saudis into the U.S. over the next 4 years. Later, the Crown Prince, in his own remarks, said that they're working to increase that figure to $1 trillion. But what we do know is that around $300 billion worth of those commercial deals were actually agreed during that Saudi-U.S. investment forum. Just to run you through some of the highlights there, a massive defense deal, $142 billion. Saudi Arabia will be buying arms and weaponry from the United States. There are partnerships in AI, and I think this is right up your street, Tom. And one of the reasons why we saw Nvidia and AMD rally so much yesterday, because an announcement came out saying that Nvidia and AMD will be supplying chips to Humain, that is the Saudi Arabian AI investment firm that was announced earlier this week. They're going to be building up data centers powered by some of those Blackwell chips from Nvidia. So good progress there from the GCC country standpoint, because they've been angling to get access to some of those high-end chips. Also announcements on Boeing. One of the aviation companies owned by PIF have announced that they're going to be buying up to 30 Boeing 737 MAX jets, so announcement there. Energy, Aramco pledging to invest about $4 billion in a Texas refinery, and further MOUs on energy and critical minerals as well. So much to sort of get through. But from a commercial standpoint, certainly making a lot of waves with some of those flashy announcements, but we are getting more meat on the bone as the days progress. And the big question, of course, is whether Saudi can actually match up to some of those commitments, given the constraints on the fiscal budget right now.
Yeah, that's a good point. Look, $1 trillion, $600 billion. What is a mere $400 billion between friends? You've been focused on the geopolitics as well, I know, Jemana. And there was the big line, of course, and you saw, you were in the room for that ovation, the standing ovation, when Trump announced that he'd be removing sanctions on Syria. Talk us through the meeting that's expected between the US president, the Syrian president, and then, of course, that trip to Qatar.
That was the statement that received the most applause and perhaps the biggest amount of attention during his very long speech yesterday. It came as perhaps a little bit of a surprise. I mean, there had been expectations that the U.S. were thinking about removing these sanctions on Syria, but the fact that he announced it and then credited the Crown Prince for getting them there was, again, another big victory for the Crown Prince. But it is symbolic and also quite significant at the same time. We don't know the details of how the sanctions are going to be lifted, whether it's going to be all in one go or a slow repeal of some of the sanctions. But what President Trump is trying to achieve here is his vision, or the Trump administration's vision, of promoting stability in the region. He has talked about the birth of a new Middle East. They sense that Iran and its proxies are on the back foot, and therefore the Trump administration wants to help out those countries that are in very much need of reconstruction and rebuilding. And of note, he mentioned Syria with the removal of sanctions that gives them an opportunity to start focusing on reviving the economy again, with 90% of the population living in a state of poverty. Also Lebanon, it came up many times in the speech. He also pledged support to the new government there and says that he plans on working with them. So I think the speech also laid out just what their bigger, broader ambitions are in terms of geopolitical priorities. A lot of mention of Iran as well. He referenced the fact that Iran has been, quote unquote, exporting terror to the region, but that he does want to do a deal. He says his goal is to do a deal with Iran, but at the same time, if they continue behaving in an antagonistic way, the U.S. would not hesitate to resume a maximum pressure campaign and to drive those oil exports to zero. One of the reasons why you saw a big spike in the price of oil yesterday. So yes, lots of really important announcements coming out of that speech yesterday, and also giving us in the region a better understanding of how the administration is thinking about the next few years and what they're looking to achieve. The big one, of course, the massive trophy, would be the expansion of the Abraham Accords. But for Saudi Arabia, that would be a difficult line to cross at this point in time, given that the war in Gaza continues.
Yeah, those complexities are certainly there. Deal-making and geopolitics, of course, in focus on the president's visit to the region. Horizons Middle East and Africa anchor on the ground for us, Jemana Besechi in Riyadh. Thank you. Let's cross over right now to Singapore and check in on the Asian markets with Avril Hung. Asian markets on the front foot. We're talking about tech in terms of the deal-making. We're talking about tech as well when it comes to the earnings story for China.
Yeah, absolutely. And there's a sense of resilience in that sector. But let's talk about the benchmarks first, because today it's a fourth day of climbs on the region's MSCI Asia Pacific. And this is really fueled by what we're seeing in the chip stocks tracking their US counterparts. That's helping the TAIEX and the KOSPI to outperform. In terms of the Hang Seng, just a day ago, remember, its rally took a breather, returning to its winning ways today, helped by tech. And this is really the sense you get of how Chinese companies, even in the face of tariffs, even in the face of a weak economy, looking quite resilient as far as earnings are concerned. Whether there's follow through on this really dependent on whether we see that US-China trade deal after this 90-day reprieve. Now, flip the board. Amid the lingering uncertainty still, investors, as you allude to, are focusing on the earnings. So we're seeing from the likes of JD.com, fastest pace of growth in terms of revenue for 3 years. And we're also seeing the projections for Tencent later today. It's expected to show steady pace of growth as well. So that's what you're seeing in Chinese firms. For SoftBank, we of course saw profits doubling as I reported a day ago. For Sony, the picture a bit more nuanced because it's in the green today in terms of stocks, but this is more to do with the share buybacks. It's announced it actually expects a $700 million tariff hit. Don't forget that its PlayStation 5s are still primarily produced in China, and it has the US accounting for a bulk of its sales. So that's what the picture is in terms of stocks. For the board, just very quickly rate you through what's going on in the FX space, because of course we've been watching the renminbi, and just a day ago it hit that 6-month high on these signals from the PBOC strong fix. Today the fix, yes, providing support for the yuan, but it missed the mark in terms of traders' estimates. So maybe a bit of uncertainty there, and that weakness you're seeing also reflecting investors' focus on the US-China trade talks to come. Tom.
OK, we continue, of course, to monitor the fluctuations in the yuan. Avraham in Singapore, we're looking ahead, of course, to the Tencent earnings as well, which we will break for you. Alibaba later in the week. Talking, of course, of tech, a rally in the world's largest tech companies stateside, wiping out the S&P 500's losses for the year on bets that tensions around US President Trump's trade war are cooling. For more, let's bring in our markets reporter, Bloomberg's Baristas right now. Val, the Sell America theme. What Sell America theme?
Exactly, Tom. It's Buy America now. I mean, take a look at this. The S&P 500 completely erasing its losses year to date, Tom. And now we're only 4% away from returning to all-time highs for the S&P 500 index. The last two sessions have been the strongest two-day gains that we've seen in the last month. A lot of this driven by big tech. Take a look at Nvidia's rise yesterday. Jumped near 6%, taking Nvidia shares close to a 10-week high for this big cap tech company. A lot of this driven by that optimism around Saudi Arabia. Also some hints that Trump's chip restrictions might be loosened. So big tech definitely leading the rally yesterday. What was notable, though, about yesterday's price action was what happened with the dollar. On Monday, we saw one of the biggest moves stronger in the Bloomberg Dollar Index since the election. Yesterday was very much a different tune. We saw the dollar weaken over the last 2 days. It's now weakened now near 0.8%, erasing a lot of Monday's strength. That was a very notable thing in the price action from yesterday. It was a traditional risk on, Tom. We had equities higher, bonds weaker, the U.S. dollar weaker. We haven't seen that for a while, have we? Traditional risk on. We also got slightly softer inflation data, which I know you were looking at, Val, as well. How is that? What are the reactions being to that from the president and in terms of pricing around the Fed? This was to some extent unexpected. We may have seen some tariff impact. It wasn't really there. Yeah, the tariff impact really wasn't seen, at least in the goods components of inflation. So we had the dollar moving weaker after soft CPI. We also had President Trump tweeting that this is just more evidence that the Fed should be cutting. It is notable, though, that it's opposite from what the theme has been this week. Over the last two sessions, the terminal rate for the Federal Reserve has actually ratcheted up higher. A lot of that to do with the de-escalation around the China trade. But we've heard from the president on what the Fed should do. We are going to hear from Fed members later today. We have 3 of them speaking. Be interesting to see their reaction to not only the soft CPI yesterday, but perhaps what a de-escalation of the China trade situation would mean for monetary policy. But it is a packed schedule, at least for the remainder of the week when it comes to U.S. data. Tomorrow is a big one. Not only do we have Walmart earnings, but we have U.S. retail sales. We also get PPI tomorrow, and we end on Friday with another reading on the consumer, the UMISH consumer confidence reading. So a lot more hints to come on the health of the U.S. consumer for the rest of the week. OK, Fed speak and more data. Bloomberg's Valerie Teitel, markets reporter, breaking down what we have seen on the inflation front. Of course, the year-to-date gains now for the S&P 500. Let's flag what else is on the agenda then this Wednesday, 7 a.m. UK time. We're going to get a touch on the luxury space here in the UK with Burberry earnings.
the China story is going to be important there as well. To what extent is that brand being revived or not? That has faced, of course, the company a number of challenges. We'll break those numbers for you at 7 a.m. 10:15, we're going to get the comments then from the Fed's Chris Waller, speaking at the central bank research event, something that Val was touching on, so some Fed speak for you. And later, Tencent earnings as well. So the most valuable tech stock over in Asia, reporting with a focus on gaming, social media, and, of course, the AI impact as well. You can get a roundup of the stories you need to know, of course, on the Bloomberg.com website and, of course, on Bloomberg Daybreak on your terminal. Coming up after the US benchmark S&P erases its losses for the year, we're going to talk markets and economics with Melanie Debono from Pantheon Macroeconomics. That is coming up. We'll do a view on how the economic landscape is shifting around the trade story between the US and China. Stay with us. This is Bloomberg.
Next week, Bloomberg brings you live coverage from the Qatar Economic Forum. Bloomberg Horizons Middle East and Africa and The Pulse will be broadcasting live from the conference floor. Then, throughout the day, we'll bring you all the highlights from the key policymakers and market movers on the issues confronting the global economy. Live coverage from the 5th edition of the Qatar Economic Forum starts Monday, right here on Bloomberg Television. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, the US benchmark S&P 500 has erased losses for the year on signs that trade tensions are easing, and after a report showed American inflation was softer than forecast. That was the CPI data, of course, out yesterday. For more, let's bring in Melanie Debono, Senior Europe Economist at Pantheon Macroeconomics. Melanie, I'll just get your top-line view in terms of the market adjustments that we've seen on the back of the talks between the US and China over the weekend, and we'll get your views on how that impacts Europe. But top-line, S&P 500 back in positive territory. As you take a step back, do you think the tailwinds are there for further upside?
The recovery in markets has been quite phenomenal. It shows quite clearly that sort of markets have relegated the trade war to sort of just a quick nightmare. It seems like they assume that any hit, even if tariffs are going to be permanent, would be minimal on Europe and perhaps even the global economy, or that maybe because the US is open to pauses, that maybe everything will go back to normal. So it pretty much seems like they've put it to a side. But there are risks. So for two reasons, we think they need to be on call. First, we don't know if the 90-day reduction in rates between the US and China on tariffs is something that will be sustained. No one knows exactly what the US is willing to accept after the 90-day pause. So there's this, everything can change. If Donald Trump tweets something differently, it can be done very quickly. And also, secondly, we need to be on call for the fact that the U.S. and China deal now means that actually Trump might go harder on Europe. So European markets need to be on call for that.
OK, so just unpack that for us, because broadly the sentiment, the view from many is that a détente between Beijing and Washington is good news for the global economy. Europe would obviously be a major part of that. You say, though, that the deal-making means that potentially the focus of Trump's ire is now on Brussels.
Yes. So after the deal was made with China, the U.S. president came out and said the EU is somewhat nastier than China. So it sort of solidifies our view that he will come hard on the EU. And nobody really knows what the U.S. wants out of the negotiating table after the negotiating begins. So the EU has offered a zero-for-zero trade idea, but that was quickly rejected by the U.S. And it last week published a list of goods that would face a higher tariff in July if the negotiations don't go its way. So the EU did that clearly to bring the US to the negotiating table. Any deal that the US has now struck with China, it needs to sort of compensate for that damaging climb down to its credibility. So we think it will come hard on the EU.
Is the ECB a backstop for the EU in a situation where there isn't a resolution between Brussels and Washington on trade?
I think the ECB at the moment is in a very much a wait-and-see approach. So at the moment, we don't exactly know, other than the fact that the current 90-day pause on EU tariffs will end in July. It is waiting for whether or not the EU pushes through with that retaliation. So any EU retaliation would raise European prices or European consumer prices, and therefore there's an upside risk there for inflation. And there's also the upside risk of inflation to the EU from the fiscal stimulus that Germany has announced. So as Isabel Schnabel, the executive member, mentioned it just a few days ago, there are upside risks to inflation, even though markets seem to think that any trade war would be very much disinflationary for the EU.
So markets pricing in two additional cuts from the ECB through the end of this year. Does that seem a bit of a stretch, given those inflationary risks?
It seems fair. We currently have 2 more cuts. We've got a cut, 25 basis point cut in June, and another 25 basis point cut scheduled for July, which would take the deposit rate to 1.75%. But the risks are very much to the ECB stopping it too.
You see us getting to 175 on the benchmark, the baseline rate for the ECB. What is the neutral rate?
Well, in fact, so our estimate of the neutral rate has been higher than most markets, than market estimates. And in fact, we recently had the rate or the ECB stopping to cut at 2%. And we've long been saying that if it goes below 2%, it would go up again next year. And in fact, we have 2 hikes scheduled in for 2026 because 1.75 is below what we estimate to be the natural rate. And we do not think next year it needs to be in an accommodative stance because growth will pick up and so will inflation.
And the fiscal stimulus to Germany, that's a 2026 story?
It's probably a late 2025, early 2026 story. Of course, the current German government is working on a clear mandate, but also a very fragile mandate. So it really depends on how much the new prime minister manages to agree across the board, which his biggest challenge right now is whether or not he will break the taboo of all taboos in Germany and work with the far right, the Alternative for Deutschland, which is now a big part of the German government.
Before we let you go, Switzerland, you have a view on a pretty deep cut from the SNB coming in the pipeline.
Yes, we do. Well, inflation came in at 0% in April, and at that time, we had to lower our inflation forecast, and now we see deflation all the way out to the middle of 2026. The Swiss National Bank will probably have to lower its forecast because we've had strength in the currency because of safe haven demand, but also seen oil prices come down quite sharply. So it will lower its forecast in June, and we think it will be enough for it to cut by 50 basis points, taking the key policy rate to minus 0.25%.
OK, minus 0.25 for the SNB with a 50 basis point cut on deflation in Switzerland. Melanie, thank you very much indeed for giving us your views updated in terms of the outlook for the European, US and Swiss economies as well, and the central bank action. Thank you. There's plenty more coming up. We'll get you the views as well. President Macron over in France, critical of Israel and its treatment of Gaza. Maybe some shifts in Brussels. That conversation will be coming up. Now let's bring you up to date with some stories also front and centre for us this Wednesday. President Trump says Secretary of State Marco Rubio and other US officials will go to Istanbul later this week for potential talks between the leaders of Russia and Ukraine. This despite ongoing uncertainty as to whether President Vladimir Putin will show up. A senior White House official told Bloomberg that Trump envoys Steve Witkoff and Keith Kellogg would also attend. House Republicans may reach a breakthrough on state and local tax deductions today. This, according to Speaker Mike Johnson. The issue has been one of the thorniest policy debates in President Donald Trump's economic package that Republicans are seeking to advance through the House in the coming weeks. And the feud between Harvard University and the Trump administration is deepening, with a White House task force terminating $450 million in grants to America's oldest college. This comes on top of more than $2.2 billion in funding that has already been revoked in a dispute over discrimination, anti-Semitism and academic freedom. And hundreds of Starbucks workers have walked off the job since Sunday to protest a new dress code, with their union promising more strikes to come. Starbucks Workers United represents staff at about 570 of the 10,000 company-run US stores. It's filed a complaint saying dress code changes during contract talks are unlawful. Starbucks says there is no significant impact to operations. And the UK Defence Secretary says the UK and EU are in the toughest stage of talks, aiming to secure a common security and defence pact. John Healey spoke to Bloomberg's Lizzie Burden about his goal to secure access to European spending programmes for British firms.
I want markets to champion defence. I want them to invest in defence, just as we are doing as a government. So we're putting 5 billion extra into defence this year, and we've made the commitment that we'll increase that to 2.5% of what the country produces by 2027. We haven't spent at that level in the UK for 15 years, and we're doing that to respond to the threats that we face. But we've slipped behind Germany as the second biggest European spender in NATO. The army's at its smallest since the Napoleonic era. Is that 2.5% of GDP on defence by 2027 enough to fix those issues? Well, you're completely right. We've had 14 years, as one of my predecessors, Ben Wallace, said, of hollowing out and underfunding our armed forces. So we've got a big job to do, not just to meet the threats, to develop the new technologies that give our forces the kit they need for the future. But no, 2.5% is not enough. It's why we've also made the commitment that we'll reach 3% in the next Parliament as well. But for me as Defence Secretary, it isn't just about how much we spend, it's how well we spend it and how we spend it. So on that point, will the increased spending be ring-fenced for UK companies, or would the UK arm of a US company count, for example? Well, first of all, the how we spend has got to reflect the threats and what our forces need for the future. So I've made the commitment that, alongside the Chancellor, that 10% of what we spend on equipment this year in defence will be ring-fenced for novel technologies and novel equipments. We've got to put our forces at the cutting edge of technology to give them the edge on the battlefield as well. But would you agree that the UK defence industry needs to be less reliant on allies like the US? So when the Prime Minister made the commitment that we would raise defence spending to 2.5% and then to 3% in Parliament, he spoke almost as much about the British economy as he did about national security. And we're a government that recognises defence is an engine for growth. And I'm a Defence Secretary that will direct British defence investment wherever I can to support British-based business, British-based jobs, British-based innovation and British-based technology.
UK Defence Secretary John Healey speaking to Bloomberg's Lizzie Burden. Let's get you a check on the markets right now. European futures called lower by 0.2% in the context that they've had 4 straight days of gains. FTSE 100 also pointing lower by around 0.2%. A very strong session again stateside, with the S&P 500 ending up 0.7%, but the real strength coming through for the semiconductors and Mag 7. Mag 7 as a basket of stocks ending up 2.2% by the end of the close. The Nasdaq 100 gained 1.6%, partly down to softer inflation, partly, of course, down to the deal-making in the Middle East and commitments of shipments from Nvidia and AMD to that region as well. Saudi Arabia, of course, where President Trump currently is. S&P futures looking to build on those gains modestly, but the gains are there, still in positive territory for the S&P 500 futures. The E-mini is pointing higher. Nasdaq 100 futures looking to add around 27 points, up 0.1%. But again, after gaining 1.6% yesterday. Let's flip the board and have a look cross-asset then. In terms of the inflation story, didn't lead to a huge adjustment in terms of pricing for the Fed. Still expecting around 2 additional cuts from the Federal Reserve. 4.46 right now on the benchmark 10-year. Euro-dollar at 1.11, largely unmoved on the single currency in the session today. Brent a little softer by 0.6% on oil prices after a move higher on the trade tension easing between China and the US. Gold currently down 0.8% on the yellow metal. Now, French President Emmanuel Macron has urged the European Union to step up pressure on Israel over the humanitarian situation in Gaza. Some would call it a crisis. For more, let's go to Bloomberg's Caroline Connor in Paris. Caroline, Macron accusing Benjamin Netanyahu of shameful behaviour in blocking aid to Palestinians. It's been for over 70 days now. It's a toughening of language from the French leader.
Oh, for sure, Emmanuel Macron has really toughened his position against the Israeli Prime Minister Netanyahu over the past few months, especially since Israel has been trying to block humanitarian aid access to Gaza. And clearly last night he had this change of tone, saying, as you mentioned, that the behavior of Israel in Gaza was unacceptable and shameful. And clearly this is is a change of tone. He said he got angry at Netanyahu in a recent phone call, talking about the double state idea, pushing for a Palestinian state. Really, this is what Macron has been trying to push over the past few months, talking to regional Middle East leaders, going to Egypt recently, talking to Donald Trump about it, really trying to push for this two-state solution, something that Netanyahu is totally opposed to, because he said that this would create a bastion for terrorism in Gaza. Macron is also trying to push for normalizations of relations between Israel and Saudi, and in fact there's going to be a French-Saudi-led conference in New York in June about this idea of a Palestinian state, of a double-state solution, something that Netanyahu, again, is totally opposed to. We have to actually wonder whether this signals a shift in European stance towards Israel, because this is also coming after the Netherlands also talked about possibly a collective reassessment of the cooperation between Europe and Israel. Other than that, of course, Emmanuel Macron talked about increasing defense spending in the context of uncertainty about the US support for Europe's security, talked about increasing NATO spending from 2% of GDP in France currently to around 3% of GDP. That is Macron's current target. And he also spoke about extending, again, this nuclear umbrella from France to Europe. As you know, France and the UK are the only two nuclear powers in Europe, and there's been discussions about extending this nuclear umbrella. Last night, Macron spoke about possibly even positioning some of these nuclear bombs to other countries in Europe, but of course always within the framework of NATO.
Yeah, and his comments, of course, criticising Israel coming after a United Nations-backed report suggested there could be widespread starvation in Gaza and potentially a generation impacted by the malnutrition that is being impacted and felt right now across that population. You talk about some of the other topics that he touched on in that long and widespread interview then, Caroline, and the nuclear weapons plan that maybe French officials are thinking about, significant in terms of the potential response from Moscow. What are the practicalities of this? How real is this? Is France working closely with Germany and others on this potential initiative?
Yes, in fact, we had the new Chancellor Friedrich Merz visiting France just a few days ago. This was his first visit since he was named Chancellor, and they discussed this possibility. Of course, at the moment, under the current framework of NATO, the US controls the nuclear weapons in Europe, even though some of the European allies, such as France, such as Belgium, Turkey, other European countries, can actually deploy them. They are controlled by the US, and of course with the current state of the relations between Europe and Donald Trump, this puts into questions whether France and Europe needs to regain sovereignty over this deployment of nuclear bombs. So this is something, of course, that's going to be discussed again among European leaders over the next few months. You saw, of course, this visit of the four European leaders to Kyiv last weekend in order to step up pressure against Russia again. And we also have some kind of normalization with Saudi. That's going to be key. And of course, this trip with Donald Trump in the Middle East currently happening is also going to be key, especially with the fact that Donald Trump has been focusing during the first day on mainly trade and economic deals, whereas Europe is really looking at the international situation in the Middle East and normalizing the relations with Saudi in order to step up pressure in the region.
OK, Bloomberg's Caroline Connor in Paris. Thank you for the update. The lines, of course, the comments coming through from the French president overnight in that lengthy interview. Talking of tensions in the Middle East, of course, you think about what's happening with the Houthi rebels. You think about what's happening in that region, the impact on the shipping companies. And we have lines crossing from Hapag Lloyd in terms of the earnings for the first quarter. In dollars, first quarter revenue coming in at $5.32 billion for Hapag Lloyd. Again, first quarter revenue in terms of earnings in the first quarter, $487 million in the first quarter. They still see full year earnings, EBITDA, of between $2.5 billion to $4 billion. So quite the range, but at the top end of the range, that $4 billion number coming in slightly higher than the estimates of $3.31 billion, but at the low end of the range, of course, softer than that. So we see a range of between $2.5 billion to $4 billion in terms of full year EBITDA for this year. Hapag Lloyd coming through with the numbers on first quarter earnings and a look ahead to the rest of the year to date. As you can see, the performance of that stock in negative territory. Now to tech and China. Investors will be closely watching earnings from Tencent and Alibaba for clues on the health of China's tech sector and its potential for growth. Let's bring in Bloomberg Intelligence senior analyst Robert Lee. Rob, Tencent coming up later today. Then we have Alibaba later in the week. What are you looking for when it comes to Tencent? What should investors be paying attention to?
OK, good question. Well, I guess Tencent is the leading tech platform in China. It's a very well-diversified business. It's typically a leader in most of its main markets, and therefore that brings a certain level of defensiveness. So famous last words, but we're not expecting any major surprises. It's a business that's relatively straightforward and easy to analyse and to predict. So I think it'll be more steady as she goes type sort of message from them. The main drivers of the business in the first quarter were the seasonal strength that they normally see in the video games market, and also ongoing strength in advertising, with maybe some modest margin enhancement from the application of AI within their core business. So, you know, should give some the market some reassurance that things remain on track despite the recent backdrop of tariff concerns.
Yeah, that potential margin improvement around AI will be interesting in terms of how they're implementing that, as you say, across the business, to a slightly different space within the tech ecosystem, but one that you follow very closely as well. Hon Hai or Foxconn, the market is expecting strong numbers from the producer, of course, largely of Apple iPhones, but others, and they have that focus on AI as well, an AI kit. Talk us through what to expect then from Hon Hai.
OK, with Hon Hai, I guess what we're going to see in common with many of the tech firms that have reported so far this season is a pull forward of demand. And this was ahead of the recent changes in tariffs because of the significant underlying uncertainty. There was a pull forward of demand, rush orders coming in. So I guess that's, there's a very high chance we'll see that reflected in the numbers. And if you look at what consensus is penciling in, I think from memory it's around 60% growth at the operating profit level. So these should be strong numbers. But the question is, how sustainable is that? The second question is there potential risk on margins, given the very rampant competition we're seeing in AI servers? And then more importantly, there's the ongoing tariff impact. OK, obviously the US has walked back on the tariff front, but we know President Trump, one thing we know about President Trump is perhaps he's unpredictable to some degree, to state the obvious. So as things look at the moment, the immediate tariff pressure has receded on Hon Hai, but that is, I think, an ongoing uncertainty for the rest of the year. Hon Hai is a very complex business. In brief, there's also the ongoing transition of their production from China, maybe into India, so we expect updates on that front. And then there's a more important question about the strength of underlying demand for Apple phones, because they are seen as a good barometer on the health of Apple demand within Asia and within China in particular. So there are multiple things to look for, but on the face of it, they should be strong numbers enhanced by this pull forward of demand.
Yeah, I mean, that's a really important wrap of what to expect from Hon Hai. We keep across the lines, which could drop any moment, and of course we'll break those for you. Look, you've talked, of course, about AI, and the market was taken by surprise with the DeepSeek innovations. You were not, Rob. If anyone had been reading, of course, your research, they would not have been taken by surprise because you've been following this quite closely. We have a big take today focusing on DeepSeek, but particularly the personality of the man behind that business, but also what it tells us about the innovation that is taking place, particularly in Hangzhou, where they're based, of course, the home as well, of Alibaba. What stood out to you in terms of what we understand about this business now and their objectives?
Okay, so Liang Wenfeng, the CEO and founder, as some of your viewers may know, he started as a hedge fund trader. He has a quant fund. I mean, it was the profits and cash flow of that which helped fund or gave the seed funding for the developments for DeepSeek itself. But I suppose in future years to come, I mean, even him, when he's looking back on his career, what's the major achievement? What's going to be the thing that makes him proudest when he looks back on his career? Is it the millions or billions that he's made? No, I think actually, you know, if we really understand this individual, and he's a very secretive person, he rarely gives media interviews. I think he's an engineer at the end of the day. He's a developer. So I think if he wants to achieve anything in his career, it's actually pushing the boundaries on the technology front. And ultimately, in common with many AI companies, it's sort of trying to push the boundaries and achieve the holy grail of AGI, or artificial general intelligence. I think that remains some way off, and we don't really have any visibility on that. But I think really that's their core focus. It's not, though, on the commercial side. And in some ways, there are parallels between DeepSeek and what OpenAI was set up for. The original founding principles of OpenAI as a non-profit company were more altruistic, if you want to put it that way. And I think DeepSeek definitely shares those. The sort of pushing the technological boundaries, I think, very much ties in with China's push towards technological self-sufficiency and helping proliferate AI within broader Chinese technology, both on the consumer side and within the enterprise sector. So I think these are really the prime motives of what DeepSeek is. It's not necessarily a profit-seeking or profit-motivated company. Again, on an individual basis, he's made his money. But I think it's there to help support the national aim and help drive the boundaries of technology to ensure that China, you know, remains in the race in what is effectively a two-horse race between the US and China in global AI.
Yeah, and it may also be a reason why, of course, the founder of DeepSeek and the company behind it was invited to that meeting with President Xi Jinping, because it aligns with that policy, doesn't it? Rob Lee from Bloomberg Intelligence, excellent wrap of what to expect, of course, from Tencent, Honhai, and looking at the story around DeepSeek for us. Rob, thank you. Now, some of the stories making the news this Wednesday. L'Oréal selling $1 billion of investment-grade notes yesterday, the company's first deal in the US corporate bond market. Bloomberg understands the cosmetics firm's 10-year note yields 0.625 percentage points above comparable treasuries. Daimler Truck has cut its sales and profit guidance for the year, citing increased economic uncertainty in North America. The firm's Freightliner brand leads the US truck market but builds a large share of its rigs in Mexico. Daimler has said it would pass on any tariff-related cost increases to customers. Coming up, Europe tries to play tech catch-up with the US and China, tying into the conversation we just had with Rob Lee. We're going to discuss the outlook with one of the continent's largest venture capital firms. That is next. This is Bloomberg.
It would be very exciting to have autonomous vehicles here in the kingdom.
Indeed.
If you're amenable.
You heard it here from Elon. He's bringing his robo-taxi to the kingdom.
Yeah.
He has another announcement that he's going to share.
Exactly. So, and I'd also like to thank the kingdom for approving Starlink for maritime and aviation use.
Tesla CEO, of course, Elon Musk, speaking at the Saudi-US Investment Forum in Riyadh. Here in Europe, political leaders are promising huge technology investments as the region looks to catch up with the US and China. Let's talk tech then with Rainer Markelt, general partner at HV Capital, one of Europe's largest venture capital firms. Has been in the business for 25 years. Portfolio companies include Zalando, HelloFresh, Delivery Hero, but also pushing into robotics and aerospace. Rainer, good morning. Joining us from our Berlin studio. We've been talking this morning, Rainer, inevitably about the geopolitical shifts that we have seen since the new Trump administration took place. What is the number one issue that's top of mind for investors and for founders within Europe's tech ecosystem?
Good morning, Tom here from Berlin. And let's get right into it. As you rightly said, we're in the market for 25 years. We've seen a lot of ups and downs, cycles come and go. I think what we're seeing now is, first of all, a very, very positive cycle. All the discussions on the macro front, on geopolitical issues, fuel a whole wave of companies and a lot of tailwind for what we are seeing. Now, doesn't come without challenges, of course, and as you asked, I'd say the main challenge is that the current volatility and insecurity in the market has sparked kind of discussions around IPO markets, which are frozen at the moment, but hopefully starting again, because we need liquidity back in the sector that gets then invested into all those technology transforming companies that we are able to back.
Even when those capital markets do reopen, would you seriously advise your portfolio companies to list in Europe versus the US?
Oh, absolutely so. I mean, we are based in Europe, we are born in Europe, but most of all, we are big believers in the European opportunity. And I think it's fair to say that what we see currently is unprecedented in the 25 years that we've been operating with. There's always been a discussion, can Europe really build globally leading tech businesses? And I think, first of all, the data shows and the companies that came out of this, you mentioned a few of us in the consumer space, but there's much more inside our portfolio and other portfolios such as Klarna, Spotify, Zalando, Delivery Hero, HelloFresh, all the way into the new breed of tech companies in robotics, in quantum computing, in energy. We have the ability here in Europe to build globally relevant companies, and we could not be more excited about the European opportunity. In fact, actually, you see entrepreneurs coming back to Europe and deciding for this opportunity against other places. So Europe is definitely the place to be for the next 10, 25 years.
Yeah, that's interesting. We've heard others within the VC world talking about that reverse brain drain out of the US into Europe, so benefiting in terms of the talent story here. When it comes, you touch on deep tech, Rainer, and some of the opportunities there. How powerful an opportunity is that potentially? How much do you want to lean into that? And do we have the patient capital needed for deep tech?
Yeah, I think with your last point, you hit on one thing that we're trying to fix in the system. There is sufficient capital, and I think it's fair to say that also on that front, backing by politics, by society, the willingness of large capital pools to invest in this technology transformation that is needed to bring back Europe on the global map of macroeconomics. And Europe has actually had its wake-up calls and is stepping up to this opportunity. But there's significant willingness to go after this opportunity by means of huge capital pools. There's, on the other hand, all the talent there. We have great universities. The number of patent filings in those sectors has shot up, has always been at very high level. So the opportunity is there, the capital is there, and all it needs is a few venture capital guys such as us putting the right money putting the money to the right companies. Now it's not as easy as said, but the opportunity, rest assured, is massive, and we see Europe really with a lot of momentum going into this, especially in this deep tech segment.
Okay, the opportunities. And look, we touched on the liquidity challenges, and that is clearly an issue for some, at least. Where is the pain point now when it comes to the liquidity freeze that we're seeing? Are you seeing consolidation in some parts of this market? Where are you seeing that pressure?
Well, you hit on the patience that we need to build up those companies, and it's clearly those technology companies going for the long run in fusion, in robotics, in quantum, in biotech. They need not 5 years to build up, but more like 10, 15, if not decades to build up. So we need this patient capital. And on the other hand, the patient capital needs some liquidity to honor the commitments in funds, in startups. So whereas we don't depend on IPO markets bringing liquidity in on the short term, we just need to see at some point this market providing liquidity so that it's constantly proceeds delivered to investors that get reinvested in the sector. So hence a liquid public and M&A market is essential for what we do, and we hopefully will see IPO markets coming up again, opening up. We do see active M&A markets, but it's a necessary ingredient to what we do.
Yeah, indeed. Well, we continue to watch that development, don't we? Rainer Markel, excellent insights. Thank you so much. General partner at HV Capital, 25 years, of course, that business within the VC space, and a number of big names within the portfolio, including Zalando, HelloFresh and Delivery Hero. There's plenty more coming up. We'll talk about tech in China as well, give you a preview of what to expect from Tencent and how that is outstripping, in fact, Mag 7 in terms of year-to-date gains. Stay with us. This is Bloomberg.
To see the U.S. Secretary of Treasury come to a meeting of the minds with the Chinese leadership was an important moment between our two nations. And I'd like to take this not as a moment in time or reflect upon the fragility of what's been accomplished, but rather to focus on the fact that we have opened the doors to a negotiation. And I do believe that the actions of both parties makes it clear that we want to find common ground.
Citadel founder and CEO Ken Griffin speaking to us exclusively. And of course, that détente between the US and China is a big reason why you've seen the S&P 500 erasing the year-to-date losses. That came through yesterday, of course. Also momentum in terms of semiconductors, Nvidia and AMD securing some deals in the Middle East, plus more benign inflation. I'll break that down for you shortly. All led to the erasing of those losses for the S&P 500. Bank of America says the pain trade is going to be mostly higher because fund managers on their survey, 38% were underweight US stocks leading in to those Geneva conversations between the US and China. So that coming through from Bank of America. Let's flip the board and have a look at the inflation story with a focus on eggs. But broadly, let me just tell you that in terms of the numbers, third straight month where CPI has come in below the forecast. So a more benign picture, the pricing around tariffs didn't come through. In terms of clothing, didn't come through. In terms of automobiles either. Those prices look more benign. Services as well, starting to soften. Consumers in the US coming back on things like leisure spend. And egg prices have plummeted. Good news if you're cracking an omelette. I'm not joking. Flip the board. Let's have a look at Mag 7. Tencent outperforming. We're going to get the numbers later today, of course. Gaming is going to be a focus. The AI margin story might be a focus as well. But Tencent has outperformed Mag 7. Mag 7 put in a decent performance yesterday, gaining 2.2% by the end of the close. But Tencent is a story to watch, of course, in terms of the most valuable tech stock listed over in China and the gains that could come through if those earnings meet the expectations, which are relatively bullish. Tomorrow, don't miss our exclusive conversation with the CEO of European defence and aerospace giant Leonardo. An important conversation, but the opening trade is up next. Stay tuned for that. This is Bloomberg.